Hello and welcome to the opening bell. My name is Isaac, and in this video we'll be recapping the stock market week of July 31st through August 4th, 2023, so let's get started. For our first stock that we are going to recap, we will start with the Walt Disney Company. So Disney reporting their earnings next week on Wednesday, a much anticipated earnings and probably the highlight of the week as far as earnings season goes for next week. So this is a chart for Disney that shows the past 6 months. And so we easily see, I'm not going to go in depth of the chart, but we see a big, not really good past 6 month chart for Disney, since this is a 6 month chart. We're going to see Disney go down, and then Disney will continue to go down all the way. And so in the past 6 months, and also in the past 3 months, as the 3 months will start in May, so we'll continue to see a downfall for Disney, starting the 6 months all the way a little above $110 and going down to around $86 even for Disney. So a really bad past 6 months for Disney. So I'm going to recap and go to a breakdown for Disney of how they can maybe go up and what we could see from Disney in the future right now. So here's the further breakdown for Disney. We have two different categories for Disney. We have ESPN and sports and and other streaming assets. Now I know ESPN is a streaming asset for Disney, but here's some other streaming assets that Disney have. So we have ESPN, we have streaming assets. So I'm going to start with ESPN and talk about how sports is impacting Disney in this 6 month breakdown. Disney with the ownership of ESPN ESPN is probably a cash revenue maker. It could be a big revenue maker if Disney can make the right decisions. And so recently we've heard from Disney CEO Bob Iger saying to sell some of their TV assets. And obviously ESPN is an asset that we don't see, at least I don't see Disney selling in the near future, because ESPN is a very big cash maker for Disney. ESPN impacts the sport market, and a couple sports leagues that ESPN could impact more are the NFL, National Football League, NBA, National Basketball Association, MLB, Major League Baseball, and MLS, Major League Soccer. All of these are very big leagues in which ESPN could further dominate. They don't really dominate these leagues. Yes, we have Monday Night Football for the NFL, but does that make a big market for ESPN? Not really. It's only one night. So maybe if ESPN could reach a further deal with the NFL, we could see a more bigger cash maker for ESPN. NBA, National Basketball Association. ESPN already has the rights to the NBA Finals, but maybe we could see an expansion towards the NBA season when people watch the NBA season. Because right now I see ESPN is not the dominant maker in the NBA. We have a lot of local networks taking over in the season, so maybe that could be a factor that ESPN could change. Of course, with their premium ESPN service, ESPN Plus, MLB, Major League Baseball, another thing that ESPN could dominate. ESPN already has a little bit of games on MLB, so maybe dominating that market more for baseball would get ESPN even some more profit. And over to MLS. Now I know Apple has the rights to MLS to stream. However, ESPN's another company that could as well make that. So maybe reach a deal with the MLS maybe in a couple years. So a lot of markets to take to ESPN. They already have a deal with the NHL, National Hockey League, to have a deal, and that has been making them some extra cash. So revenue-wise for ESPN, they have been trying to reach deals with other sports leagues. I think it's mixed picture for ESPN. In the future, they are going to make an agreement with one of these sports leagues, but it's gonna take a while. And I think personally, for my decision, I don't see the NFL as being a big choice, because we've seen from a lot of NFL standpoints, we've seen Alphabet, the YouTube Sunday Ticket, that's gonna come out when the season starts. The Alphabet bought the rights to the YouTube Sunday Ticket. For MLS, Apple, you can watch on Apple Stream on Apple TV Plus. NBA, That's one of the market I personally think that ESPN can dominate more is the NBA, because the NBA doesn't really see that much streaming. They see that they have NBA on TNT, ESPN, and a lot of local networks have taken over. So the NBA is a market that I think ESPN can dominate in the near future. MLB is another one that ESPN can dominate, because there's not that many streamers for MLB. Whereas with the NFL, however, there's a lot of streamers. We have Amazon, even Amazon Prime bought the rights to Thursday Night Football from Fox. So I'm not saying that Disney should maybe buy Fox. I'm saying that maybe Disney should maybe take an ownership of it. So Disney maybe take the rights to it. So NFL is a big market. It's the football, one of the most watched American leagues in the United States of America. So the NFL is out of the question, I personally think, for Disney. However, maybe pursue more towards other leagues, NBA, MLB, and MLS as far as ESPN goes. Let's go to the streaming assets. The streaming assets, we have Disney Plus and Hulu. They're getting a lot of subscribers, and so in order to get ESPN to reach a deal, they need revenue. And I think streaming assets is a big thing that Disney can do if they're going to make ESPN go from linear to streaming. Of course, the cable TV not doing so good in the past couple months, so cable TV as it dies. Streaming is another thing that Disney can take over by selling some of their TV assets. Hulu, ABC, ABC and FX. Disney dominates the market for all of these assets. And as the Hollywood actor strike loomed over, Disney has been getting some extra revenue. So I think selling some of these assets will give Disney some extra revenue. They can put it back into their most important assets like ESPN or Disney Plus, and they can make even more revenue. Because owning seven or maybe even more assets for Disney doesn't really do them that much. Maybe I personally think we could see in the near future Disney selling some of their assets to other competitors like Warner Bros. Discovery or Comcast. Those are other big things at Disney, and making revenue and putting it back into their most important streams. So it's my personal prediction for Disney in the near future, and so we could see a lot of this coming from Disney soon as they try to expand ESPN and develop their company more into streaming into the near future. So that's my personal breakdown for Disney. And so let's head over to our next stock, and that is Amazon. Amazon.com reported earnings this week, and they did really good on overall. They had a big jump in the week from a price of below $130 to a price all the way above $142 before traders and investors starting to sell their shares of Amazon towards the end of the week. But overall, a really good jump for Amazon in earnings reports. They have had really good earnings this week. Partly because of AWS. AWS was a really big factor. Amazon did really good on AWS, and so, of course, sales in store was a big factor to how Amazon reported their earnings overall. Let's take a quick look at some actual numbers. An estimated revenue of $131.63 billion for Amazon, and Amazon beating the street's expectations, $134.38 billion in actual revenue. Estimated per share, 35, about 0.35 estimated from the street. Amazon beating that, 0.65. Actually for Amazon. I think Amazon's a very strong stock. If you watched my video about, I think 2 weeks ago, I said that Amazon is a big buy to buy. It's a big thing to buy. Amazon's a really good stock to buy, and I think in the AI race, my personal prediction, Amazon's going to be a big factor because they dominate the market. People always buy from Amazon. Most people even have, I'm sure there's probably one thing in probably every person's room that's from Amazon. I mean, Amazon is a very big market for things. I mean, you can buy the e-commerce. I mean, that's a big thing that Amazon dominates, as well as AWS, AI. They have Alexa. They're speaking generative AI. So I think maybe they could turn their conversational AI, and they could maybe change Alexa, maybe make it into a chatbot. That's another thing that they could make. Maybe give Alexa some extra things that maybe expand and make Alexa more of a maybe make Alexa more smarter all around. Amazon could do a lot of these things. And so AWS, the cloud service, Amazon, really good growth from AWS this past quarter. So overall, I think it's a really good earning call for Amazon. I don't see this as a sign of just going to go up and then go down. I think this is going to continue for Amazon. In order for them to have a really good year in 2023, this has to keep up. I see Amazon maybe ending the year price about $160, $170 per share, maybe towards the end of 2023, if they can make that breakout in AI, if they can continue to dominate the e-commerce market. So that's a big thing for Amazon. Over to the next stock that I own, and that is Apple. Apple is a stock that I own personally, and it's a stock that's been almost really good. So a really surprising week this week from Apple. They reported their earnings this week, and they not do really good. Overall for Apple, they started the week on a pretty steady basis before dropping really bad on their earnings call. Their earnings report coming in, and Apple not doing so good. They kept dropping all the way down to a low at the end of the week of about $182, where after they started the week at a price above $195. So a really not so good week for Apple overall in terms of their earnings reports. And so this surprised a lot of people, and especially I got really surprised by this. I think although Apple, with the big drop, I think they overall had some upsides to their earnings. I mean, estimated $81.55 billion revenue, Apple beating that, getting extra revenue, $81.80 billion in revenue. And then look, some extra breakdowns. Apple services this past quarter, they did really good overall. Their services did really good. Their assets, iCloud, Apple Music, and Apple TV Plus, they did pretty good. They were flagged on their iPads and Mac sales. However, their iPhone sales is the big thing that caused this big drop for Apple, and their iPhone sales slowed. They did not have the iPhone sales that they wanted, and as Apple personally, as they expand into the near future, we're excited to see the Vision Pro. That obviously costs a lot of money for most people. So prediction is we won't see the Vision Pro as being a very big. Topic for Apple. I don't think the Vision Pro is going to do that much for the stock, as it costs a lot. Most buyers probably won't want to buy it unless it's absolutely necessary for the price of the Vision Pro headset. So this is a big factor to it. I think the Vision Pro coming out towards the beginning of 2024 is a sign for investors that the price, I think, is going to go down. I don't think it will stay the $3,000 price that we've seen it. I think it's going to start going down. It's just the new point right there for Apple overall. So I think the Vision Pro will start to make more profit for Apple towards the end of 2024 into 2025. So that's the time when Apple will actually start seeing profit. As it goes to the iPhones, as I just said, their sales not doing so good for Apple. iPhone 15 coming out soon, so flagship iPhone sales not doing so good for Apple overall. So that's one big that's one big reason that caused Apple to not do so good overall. And so just a sign that, software, as we head into the AI race, maybe Apple's not really most focusing on their hardware. Maybe they're focusing more on services and AI. Their software, not really their hardware, might be their most important aspect to think about for the company as they try to expand for more revenue. on both sides, but this is not a good earnings call for Apple. And as I said last week in my video, I don't think this is going to keep up. Even though Apple went down, they're not going to stay at 182 for the rest of the year. They're going to go up. They're going to probably go up to 190 probably within days or weeks, in my personal prediction for Apple overall. So I don't see this as being a big problem for Apple in the long run. I do not have a top stock market pick for this week. However, time to go to what to watch for next week. A lot of stuff to watch for next week. Here's a visual for you. On Monday, a slew of earnings reports this week as we near the end earnings season, like a month or so. So quarter two earnings season hasn't been the best earnings season for most companies, but it's just what to watch for next week. The slew of earnings. On Monday, we'll hear from Lucid, Palantir Technologies, and Paramount. On Tuesday, we'll hear from UPS, Under Armour, REI, Restaurant Brands International, Rivian, and AMC Theaters, the theater company overall. So Tuesday, a big day, and on Wednesday, the much anticipated earnings for Disney, Roblox, and Wendy's, all reporting on Wednesday. And so the slew of earnings, I think Disney is going to be a big, important earnings call for the market, as well as Restaurant Brands International, RBI, Palantir Technologies, and Paramount. All of these are probably going to be big and important earnings, especially as Paramount and Disney. I think those two streaming services, I think as we head into the near future, streaming is starting to become a big thing in the markets overall. So just those are some important things to see as we go into the near future. And on Thursday, CPI report, the much anticipated consumer price index report, will show investors and traders on New York Stock Exchange, as well as U.S. citizens, how our economy is doing inflation-wise. So that's coming up on Thursday. And so overall, a packed week for next week. Thank you for watching the stock market recap of the week of July 31st through August 4th, 2023. I hope you enjoyed this recap. I will continue posting stock market recaps weekly. Thanks.